There's some things about the way that many advisors or brokers do business that I think a lot of individuals don't know or don't realize. So let me just give you a few of those. Number one, at the mutual fund store, we don't take any money of any kind from any mutual fund companies. No fees, no subsidies, no advertising dollars, no 12B1 fees, no marketing, no free golf balls, no free trips. And when I tell people that, they go, well, that's not that big a deal. I mean, that's what everybody does. Well, it's not true. The reality is that the more common practice is that firms do take money from mutual fund companies in exchange for recommending their products. And you would think that that would be illegal, but it's not, as long as the firm discloses it to their clients. And the problem is they make that disclosure, typically it's hidden in with their privacy notice and with the Patriot Act requirements and all those kinds of things. So when you talk to a potential broker or a potential advisor, I think it's very important that you ask, how are you compensated? Are you fee-based, or do you get a commission every time I buy and sell something? And do you or your firm receive money or any other sorts of freebies from various investment companies to recommend their products as opposed to others? One of the other things that a lot of people don't realize is that brokers, so stockbrokers and registered investment advisors, have different fiduciary standards. Those brokers, and typically we're talking about the wirehouses, the big investment firms that you've heard of, those people have a legal requirement to make sure that at the time they sell you an investment, that investment is appropriate for you, that the risk level is, and that it's a reasonable investment. Their liability stops at that very moment. With registered investment advisors who, rather than being supervised by FINRA, which is the regulatory agency for brokers, we're supervised by the state regulatory agencies and the SEC, we have an obligation to make sure that that investment is appropriate at the time of purchase and every day thereafter that you remain a client. And so we have this ongoing responsibility to not just check to make sure it's okay when we sell it to you, but to keep checking to make sure that it continues to be appropriate. And that's why one of the things that I hear a lot on the radio shows, people call up and go, Adam, I had this broker, he sold me a fund 4 years ago, 5 years ago, 6 years ago, and that was the last time that I heard from him. Well, that's because he doesn't have a legal responsibility past the date of sale, whereas with registered investment advisors, they certainly do.